our base case assumption now is that overall GDP numbers for China should go up roughly by about 50 basis points. So roughly around 4.5% year-on-year GDP growth for 2025. Of course, now there's a lot of caveats, right? Because ultimately, this is only a pause for 3 months. What's going to happen towards the end of summer? No one knows. So potentially that assumption could slightly change as well, later on in the year.
Yeah, and as we know, President Trump, things change day to day. We've heard from Treasury Secretary Bessent that the negotiations were expected to be a slog, and it doesn't seem to be from what we've heard so far. So how are you positioning, as you mentioned the summer months, how are you positioning portfolios? What are you focused on?
Yeah, overall right now, consumption looks to be a fairly positive story because actually before all the news actually took place, we actually added a bit more onto the consumption stocks because ultimately in China, what's very important is overall sentiment. Now, if the economy actually is going to get a boost because of this pause in the tariffs, and overall, if consumer confidence do come back, then that's going to bode well for consumption. We've already seen, as you mentioned earlier, some of the companies reporting slightly better than expected numbers. We think that this quarter, sort of the numbers that are being reported will be a bit mixed, right? But ultimately, it's going to be kind of what the guidance is going to be. For us, over the next few days, is to understand, especially from a lot of these e-commerce providers, is where are they going to be setting expectations over the coming quarters? Are they going to be increasing CapEx in the coming quarters because of potentially, de-escalation between China and the U.S., which could help them as well. So these are going to be important measures. So what they announced, sort of with their first quarter numbers is good and all, but what's going to be more important is how they're going to guide expectations going forward in the next couple of quarters.
Now, we also are tracking a policy and the support from the mainland officials. So we got a cut in interest rates. We've got a cut in the RRR. Now that there is this de-escalation, the feeling is, or the word in the market is that we won't see any more stimulus or support coming through from the government. So how do you manage that in your investments?
Yeah, I think it's important to see, everybody thinks about countermeasures, right? Ultimately, if something happens, then China needs to react. But that's not necessarily the case. I think it's going to be important to see as well is, as I mentioned earlier, with the economy. Let's say if consumer confidence is still a little bit weak because, people still have reservations about what's going to happen 3 months from now. And so because of that, and let's say as we head into the summer months, if overall consumption numbers does not improve, let's say overall sentiment doesn't improve, if let's say the housing market doesn't see more of a pickup, if we don't see specifically, more investors willing to invest in capital markets, then more needs to be done. Because ultimately, China initially has set that 5% GDP target growth for 2025, and we're not near, let's say, that number towards, sort of the end of summer, then more needs to be done. And I think this is going to be very important. When we talk about our base case now being roughly around 4.5% growth for 2025, we still need to see ultimately, more needs to be done. And that's under assumptions that there's going to be further policy stimulus to help potentially still offset some of the slowing sectors that we're still seeing in China.
We're seeing President Trump making his first big trip offshore. He's gone to the Middle East in Saudi Arabia. He was speaking at the investment forum there, making announcements about semiconductors set to benefit the likes of NVIDIA as well as AMD. The bond, he says, is more powerful than ever. How can you monetize or take advantage of the developments in this geopolitical relationship into your portfolio?
Usually it takes a long time, right? A lot of these agreements, and again, even when agreements are, signed, the numbers that are being disclosed are very different, right? From $1 trillion to one party saying 600, another saying 300. It's a lot of times no one knows until the dust is settled and when there is actual investments heading in. So instead of, assuming kind of what numbers are, we focus specifically on potentially what themes might potentially benefit as a result of specific what's going on. But again, when we head back to China and when we talk about a lot of things which are going on, at the end of the day, consumption is going to be a very key part, and overall sentiment remains to be a very key part because we've seen, as you mentioned earlier, interest rates continue to go down in China. Reserve requirement ratios also continue to go down in China. But it seems as though the demand for capital from either households or specifically from corporates to borrow more money just isn't there, right? So overall, we need to see upticks in these improvements. And of course, inflation numbers also being very low in China doesn't help as well, because overall earnings growth assumptions, and when you look at the overall consensus for EPS growth for this year, is sort of in the high single digits, maybe around that 10% level. But the fact is that we want to see further EPS rises, right? We don't want to see sort of downward revisions on EPS growth, because a lot of the assumptions and a lot of the beliefs earlier in the year is actually not materializing. And that is something that we need to see over the coming few months to really see whether or not China's corporates can actually see their earnings grow by north of 10%. And this is going to be something that we're going to keep our eyes on very closely.
And you mentioned themes earlier, and we heard from President Lula of Brazil saying that China is going to be helping the country make technological progress that they need, and that their link, China-Brazil, is indestructible. Talk to us about the sectors that you're watching out for.
Yeah, I mean, again, consumption earlier, but then ultimately in IT, especially around the hardware, continues to be a very key theme. I think for this year, it's also going to be very important to note that IT-related stocks might not see as strong of earnings growth as we've seen, let's say, in the past year, because you're coming off of a high base. So when people look at the headline numbers and they're looking at, hey, maybe IT companies are slowing down, they're not really slowing down. But right now, we're going through, especially in 2025, a cycle in terms of how further developments and how are they going to be able to export that knowledge to some of these other emerging markets around the world. We've seen that happening already over the past few years, right? China is focusing more and more of the relationships away from the U.S. and into specifically secondary emerging markets. We're going to continue to see more of this, and more of that technological deployment that they can have in terms of exporting that type of knowledge into some of these other countries, especially around the Latin America region. It's going to really benefit China, because obviously that is going to be key for them in terms of exports, in terms of overall better growth, in terms of more orders for their factories. And these are all important things that we're going to continue to look at. So manufacturing is also going to stand to be very key, especially along the high technological types of exports for China.
The U.S. has now initiated a rescission of Biden's AI diffusion rule. And with that, they have announced further action, which really singles out China. They're talking about Huawei's Ascend chip to be used anywhere in the world is a violation of U.S. export controls. Also, the banning of U.S. AI chips to train any Chinese AI models. How does this singling out of China, this further isolation, what do you make of it?
I think, again, these are all potential negotiations at a later date in terms of, around the whole trade deal, in terms of what are you going to give in, or what are you going to give back in terms of other specific agreements are in place. But you also have to understand that China is such a big market domestically itself for AI developments. Over the past couple of years, I think a lot of investors have neglected the fact that China has been developing a very strong set of AI capabilities. Right? With the announcement of DeepSeek earlier this year, I think overall overseas investors and overseas technological experts are now finally understanding what China can develop and evolve. And so this, I would say, it's going to be an ongoing type of scenario to see what's going to be the next step, because China itself has already developed a lot of different areas around the whole AI ecosystem, which, as we saw earlier this year as well, a lot of the A-share AI-related names have done very well. And it's not just early this year, even late last year, they've done very well. So it's going to be important to see, because maybe if China is even further along some of the developments that they've had, which maybe the outside world, isn't too familiar about, then there could be potentially competition as to, what's going to be a more reliant partner and what's going to be more of a reliant type of ecosystem in terms of developments around AI. So I think this is going to continue to be a closely watched scenario. And we just need to see exactly what the outcome is going to be.